I'm Emily Chang, and this is Bloomberg Technology. Coming up, Tesla shares jump after smashing estimates. The electric car maker reports a rare quarterly profit. Plus, IBM CEO Ginni Rometty joins us live. We will dig into Big Blue's bet on Watson and the new partnerships with Slack and GM. And our conversation with Steve Ballmer, the former Microsoft chief, weighs in on Twitter's future ahead of earnings Thursday. He's also a big Twitter investor. But first, to our lead. Tesla shares take off after the company posts a rare profitable quarter, its second in Tesla's history as a public company. Adjusted earnings per share came in at 71 cents versus an estimated 54-cent loss. Adjusted revenue also beat. But beyond the financials, investors are listening closely to the call with CEO Elon Musk, particularly for more color on his controversial plan to merge the company with SolarCity and create a one-stop shop for clean energy products. Shareholders get the chance to vote on that plan in just a couple of weeks. Joining me now for more, our Bloomberg View columnist and auto industry analyst Ed Niedermeyer, and in New York, Axiom Capital Managing Director Gordon Johnson, who covers SolarCity. Ed, I want to start with you because earlier this year, we got our hands on an email from Elon Musk to employees saying, quote, "It would be awesome to throw a pie in the face of all the naysayers on Wall Street who keep insisting that Tesla will always be a money loser." Is this a pie in the face of Wall Street? And is it just one pie, or will there be more pies?
Yeah, I think that's a good way of thinking about it. It is clearly a pie in the face of Wall Street. But how many more pies he has left is unclear. I think one of the things that was really important in pushing them over the line to a profit this quarter was these ZEV credits from California. Those are essentially going away. And the color that I heard from Mr. Musk on the call suggests that it's not clear how they're going to repeat this in the fourth quarter, although he is saying that they will repeat it.
They did boost production. They made 25,000 cars, which is almost twice what they did last year. Is that sustainable?
Oh, yeah. I mean, they have to keep ramping up production. The real big...
Can they?
Yeah, no, I believe they can, up to a given point. I've done some research into the permits for their factory. I think there's a limit in the short term and potentially in the longer term until they file for new environmental permits. But that limit is significantly higher than where they are right now. It's more like 250,000 units. So up until that point, I think they're good. Investors
are also excited about free cash flow right now, $176 million. Why is that a big deal?
Well, because it hasn't happened before. Yeah, it's an important thing. Again, though, I mean, I think, you look at the valuation of the company, and if this is, what a profitable quarter looks like for them, how does that, right? How much cash are they really going to ever return to investors? Manufacturing is a low-volume business. This is a huge accomplishment. I think they pulled out a lot of stops to make it happen, and they got over the line. But it's not like they're, generating huge amounts of cash here. And I think that that's something that, looking down the road, you have to wonder: will they ever reach a point where they're going to really return a huge, throw off a lot of cash from the business?
All right, Gordon, I want to bring you into this. Of course, you cover SolarCity, and SolarCity shares are up following Tesla shares. Does this mean that shareholders are more likely to approve a merger?
Well, I think the shareholders have always been likely to approve a merger. I mean, if you look at the merits of this deal, it just doesn't make sense. The core basically concept of this deal is you're going to marry rooftop solar technology with battery technology, storage technology. But the whole premise and the whole tailwind behind rooftop solar technology is the ability to access net metering, i.e. storing your power in the grid. If you bring in a battery, you essentially eliminate that dynamic. So the merger doesn't make sense from that perspective. And just real quickly on Tesla's results, keep in mind, we talked about the 140 ZEV credits, but they were also guiding the street to a 35% lease rate, and it came in at 32%. The street was changing their models. That was also a big benefit in the quarter, and we know that there was big discounting. So again, as was stated earlier, I don't know if these results are repeatable. And with respect to the deal, the merits of the deal never made sense. And one other thing that's worth note is when you had Evercore come in and do the valuation on this deal, they didn't even have SolarCity or Tesla's financials before they gave the okay and put a 3 to 5% terminal value on this deal. So it's like they were in the dark and they gave the okay. There were 3 other bidders who didn't match Tesla's bid for SolarCity. So it's aggressive. I think Elon Musk takes a very Machiavellian approach to business. You want him toiling around, but you don't necessarily want him doing it with your money.
Ed, you're smiling and nodding.
Yeah, well, I think one of the things that he didn't mention was actually that CapEx is reduced. Musk just said on the call that they're going to ramp that back up in the fourth quarter as they start building up the Model 3 launch. I think a lot of investors probably assumed, and fans of the company assumed, that a lot of that ramping has already started happening. And I think the fact that they're coming in under guidance by about $500 million on their CapEx, that they're behind on that, and yet Musk says there's no impact to the Model 3, production, which is already a really, really aggressive schedule. So that's something we're going to, have to watch closely.
Gordon, we're expecting Tesla to unveil its solar roof product on Friday. What sort of an impact are you expecting from that on the potential merger?
I don't think it's going to be a big impact. Look, we're tracking California Solar Initiative data as well as investor-owned utility data looking at applications for net metering and applications for rooftop solar. There's no doubt the U.S. market has taken a nosedive this year. Just 6 months ago, ASPs, average selling prices for modules in the U.S. were 65 cents. You're talking about 40 cents right now. There's been a big drop. So the demand in the U.S. market and the U.S. solar rooftop market is suffering right now as the utilities are winning the battle, the net metering battle, and I think that's going to weigh on all the rooftop vendors, including SolarCity. If you're a Tesla shareholder and you're voting for this deal, I got to question, your sanity. I think essentially you're following Elon Musk into the void, and we think that's just what it's going to be. It's going to be a void of cash flow, eating essentially Tesla's cash flow. I don't get it.
Tesla and Elon Musk also ramping up their plans around autonomous driving. I spoke to Sebastian Thrun, who basically invented the Google self-driving car and was very excited about what Elon Musk is doing, saying that a new generation of cars, Tesla cars, are going to be fully autonomous. But there are still questions around the existing autopilot feature. You recently wrote a column where you talked about the number of deaths related to autopilot, and there's some contention around that. Clarify what exactly you were trying to say.
Yeah, so I wrote in the column that several people have died, and Tesla came back and asked me to correct that to 2. And I think it's important to clarify that 2 is the number of deaths that Tesla doesn't contest. There have been a number of crashes in which there's been some question where what the owner says and what Tesla says the data says are in conflict. And I think it's important to understand that Tesla does not provide owners with copies of the data, which for event data recorders under legislation in the U.S. you're supposed to, and they say their data collection system just doesn't meet the definitions of that. And the other thing is that they don't provide a commercially available tool. So none of Tesla's claims are been verified by third parties. So I, as someone who writes these columns, I'm totally open to corrections and to third-party verification of what I report. I just wish Tesla played by the same rules.
All right. Ed Niedermeyer, Bloomberg View columnist, auto industry analyst, Gordon Johnson of Axiom Capital Management. Thank you both. Staying on the earnings front, Groupon shares sliding after hours after the deal provider announced it's buying former rival Living Social. Groupon said the amount of the purchase is not material. The transaction should close next month. It was once valued at $6 billion in 2011. Groupon also posted a loss for the third quarter, but met analyst estimates. Coming up, IBM Chairman and CEO Ginni Rometty joins me live from IBM's World of Watson conference in Las Vegas. Her big bet on Watson ahead. Also ahead, former Microsoft CEO Steve Ballmer, known for sounding off, and he says Twitter is the best way to do it. He'll make the case for Twitter's independence later this hour. This is Bloomberg. Twitter will report third quarter earnings on Thursday, but the company's bumped up its release time to before the bell, departing from its usual time after U.S. markets close. This on the heels of our Bloomberg scoop that Twitter plans to fire about 8% of its workforce as the struggling social media company prepares to go it alone for the time being. We caught up with Twitter investor Steve Ballmer, the former CEO of Microsoft and Ballmer Group co-founder, got his take on the company's road ahead. His take very important given he's an investor in Twitter and Microsoft, among very few other things. Take a listen to what he had to say.
Well, I think Twitter is an irreproducible asset. Just think even, what goes on, Donald Trump tweeting out late at night, and everybody wants to talk about it. I don't think there's any vehicle that lets you speak broadly to a mass audience any better than Twitter. Could the product be easier to use? Of course, the product could be easier to use, and I think that's an important area. Could the product benefit from additional innovation that takes it in surrounding areas? Yes. The cost structure, at least there's rumors they're working on it. I have no information that anybody else doesn't have. But I see a lot of potential in Twitter.
So do you see Twitter having a future as an independent company?
I think Twitter would be great as an independent company, and I'm sure there are acquisitions that would also make sense for the company, the product, and shareholders. Anything you've heard about? I read what everybody else reads in the paper, if you will, and we'll see what happens.
What about going private?
Going private is a distraction. In my opinion, I think the company would be better served to put its energy into innovation than all of the work it would take to go private.
Interesting. We've heard rumors about you being interested in buying the company. We've heard rumors about various Silicon Valley heavyweights getting together to buy the company. Any truth to any of that?
No, there's still no truth to my interest in buying the company. None.
And have you ever heard anything about any others wanting to buy the company?
Nobody's reached out to me, that's for sure.
What about Jack Dorsey having his 2 jobs? Do you think that's a good setup?
I think it's easy to question. People would obviously, including me, like more out of Twitter. CEO is clearly divided in the way Jack spends his time. Certainly as a shareholder, it would be reassuring to me if he was entirely focused on Twitter. And also as a former CEO, you know how hard a job that is. Is it really possible to be the CEO of 2 public companies and do a good job? It's not possible for me to comment. I've never tried it.
Has he ever, being a big shareholder, has he ever called you and asked for any advice?
I do speak to the management team once a quarter after earnings. I certainly share, opinions that I have as they come up, and they listen to them. And I wouldn't say they solicit advice. That would be incorrect.
What do you tell them?
Well, I tell them the same things I just talked to you about. Product innovation, real opportunities, simplifying the product, real opportunities. Cost structure, do they have it where they want it to be? Those kinds of things. Okay, so last question on Twitter. As one of their biggest investors, what would you like to see happen with Twitter? Would you like to see them stay independent? Would you like to see them sell themselves? What would you like to see? I'd like to see them work on the things they need to do from a product and cost structure standpoint and be open, always open to opportunities to be independent, but also to make a sale if that seems appropriate. How excited are you about the live streaming aspect? The NFL games, presidential debates. I think it proves the power of Twitter. How it actually works out from a business model perspective, I think, we'll all learn, but I think it shows the power of the brand and the asset. My conversation there with Steve Ballmer, former CEO of Microsoft. Be sure to tune in next Sunday, 9 a.m. Pacific, 12 noon Eastern, for my full conversation with Ballmer on Bloomberg Studio 1.0. Of course, he is also now the owner of the LA Clippers. This Sunday, don't miss Vinod Khosla, founder of Khosla Ventures, always full of controversial things to say. You don't want to miss it. Coming up, we head back to Las Vegas to IBM's World of Watson conference and speak with Slack CEO Stuart Butterfield.
The secretive Silicon Valley startup Palantir Technologies may be heading towards an IPO. CEO Alex Karp said the software company is well positioned to go public. Palantir is previously valued at $20 billion, and Karp says he expects to reach profitability by next year. Lately, Palantir had seen increased employee defections over compensation backlash and its reluctance to go public. And turning now to another major tech exit on the horizon, Snapchat trying to raise as much as $4 billion in its IPO. This, according to people familiar with the matter, that could value the company at about $25 to $35 billion. Our Bloomberg Technology executive editor, Tom Giles, joins me now for more. So Snapchat is going for it.
They are going for it. After this year of IPO drought, they're really going to kick off 2017 with a bang. $4 billion on the high end is what they're looking to raise. A valuation that would be in the 25 to 35, as you mentioned. This is pretty ambitious, given that the last time they raised, they were in about the $18 billion range. So, I mean, what you're looking at is a company that's really optimistic about its prospects. It's optimistic about its evolution. This is the company that started out as this, fun disappearing text that got used for some sexting and for things that you didn't want your kids involved in. We sort of banned our kid from Snapchat for a while, but it's really evolved. It's becoming much more of a media platform, much more of a destination, much more useful to marketers, for example. They're innovating and creating new types of advertising tools that you can use. You can add filters. Politicians have really glommed onto Snapchat as a way of getting their message out. Clinton's on there, Trump is on there. They've realized that this is important for getting their message, and marketers are seeing the same thing. And Snapchat is moving into these other areas like the glasses, video. They're taking your video clips and compiling them into this kind of rough draft video of events around the world. So again, been a really big evolution for Snapchat.
And it's filled with exclusive content, whether it's a snap from a presidential candidate or a new treatment on a story from any number of media organizations. And you actually have to be on Snapchat to actually see that content and engage with it. And if you don't, it goes away.
Right.
That said, so much of this is so new. What makes Snapchat so, it seems almost like they're in a rush.
Well, I think there's a few things.
Or maybe that's because everyone else is moving so slowly when it comes to the road to IPO.
Right, and think about it. I mean, there's not a lot of, the impetus to stay private for so long is not going away. These companies, Uber has talked about, we're gonna drag this out as long as humanly possible. There's at some point, the investors, the venture capitalists who have been putting money into these companies, they're looking for an exit. I am not privy to the conversations between Snapchat's VCs and the company's management and their bankers, but you have to think that of all of my investments, I'm a venture capitalist, Silicon Valley. So many of my investments are staying private for a hell of a lot longer. I want an exit somewhere. I want somebody to get out there. Also, don't forget employees. They want to be able to, the cost of living in San Francisco in the Bay Area is really, really high. They want to buy a house. They want to start their kids in private school, whatever it is. So employees are looking for exits. Management are looking for ways to unlock some of the value that they've been sitting on.
Some of the earliest investors in Snapchat, Lightspeed Ventures, Benchmark Partners, Benchmark, of course, and Bill Gurley, also investors in Uber.
Right.
And it's so ironic that Uber and Airbnb are businesses that are at least valued much more highly, and yet they are still waiting in the wings.
Right, exactly. And I mean, something to bear in mind, too, that by some measures, Snapchat is doing better than Twitter, a company that's been publicly traded for a long time, just in terms of pure numbers and some measures of engagement. So, it's actually at the point, they're looking at revenue of $350 million. I mean, they're at the point where you start to think about them as a more mature company, as a company that's ready to get out there, and a company that's ready to take in a lot of money. As we said, $4 billion. There's a lot of snapping that can happen using $4 billion. There's a lot of areas you can expand into with $4 billion.
All right, Tom, hang on. I want to ask you a quick question about Apple. Shares slid Wednesday after the company reported fourth quarter results. On Tuesday, Apple boosting its sales forecast for the holiday season to between $76 and $78 billion, beating most analyst estimates. Some, though, thought it should have done even better in light of rival Samsung's massive Note 7 recall. Analysts on Bloomberg earlier today explained the stock reaction. Take a listen.
What investors have been asking for of Tim Cook is make Apple grow again. And I think that's what we finally saw in this outlook. It wasn't modeled. It wasn't in our estimates. And the outlook in terms of revenue for the December quarter is excellent.
As investors think about their confidence in the iPhone business, it should have been boosted last night. I think the reason why the stock is down is that simply expectations ran up over the last 2 weeks. For example, B of A was out with a call just before that they would guide to 81 million iPhones for December, and in fact, they guided above the street at 77 or 78, but below some of those whisper numbers. And so I think that our perspective is that look at the big picture. The iPhone franchise is intact. It's going to return to growth and should stay in growth mode for about the next 7 quarters, which is about as long as you can see in a tech company.
Well, one thing is clear, that Apple is no longer a growth company. We have to look at it as a value company. And the way we've looked at it is we've looked at the intrinsic value of Apple. And what it has is it has a very loyal customer base, which is actually growing, not at the pace as we would like, but it's growing install base, and they remain loyal, and they spend more money with Apple on a bunch of different products.
Now, I did speak with Apple CFO Luca Maestri yesterday, and I asked about the Samsung issue, and he said that they simply could not tell just how much this has actually impacted them at this point. I mean, we're talking only a week, 2 weeks of the actual quarter, and what he said is we've already been seeing so many Android switchers to the iOS platform. It's difficult to know at this point, but presumably they'll have more information by the end of next quarter. But what's your take?
Well, there was a little bit of disappointment that they're not making more hay. They're not capitalizing this, or at least they're not expecting it at this point. Apple can always surprise us, right?
They love being conservative.
This could be a great holiday season for them. It is too early to know. This is a projection. They don't know if that revenue is going to be 76, 78 billion. It could be much big. It could be much higher than that. They are being conservative. Now, the thing you have to remember is Samsung is going to come back with a vengeance as soon as they can get that 8 out. And you've also got to remember in China, where there was a lot of declines for Apple in the last quarter, in China they've got to deal with a lot of low-cost competitors. We've been talking about this a lot, right. And that's an area of great concern. So that's another wild card that you got to take into consideration for the Christmas quarter. Revenue
in China down 30% year over year for Apple. Okay, Tom Giles, our executive editor for Tech, thank you so much for stopping by. Coming up, IBM Chairman and CEO Ginni Rometty joins us live from IBM's World of Watson conference in Las Vegas. Her big bet on Watson just ahead. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with a check of first word news. 2016 has been the deadliest year for refugees crossing the Mediterranean headed for Europe. According to the UN's refugee agency, at least 3,800 people have drowned. Many of the refugees were attempting to travel from Libya on the North African coast to Italy. In Calais, France, migrants set fires to a refugee camp before police moved in to relocate them. Authorities then dismantled the shanty town known as the Jungle. The people are being moved to centers around France where they can seek asylum. An Egyptian court has upheld life sentences against the leaders of the country's now outlawed Muslim Brotherhood and 36 others. The appeals court rejected appeals from the group's leader, Mohammed Badi. Death sentences were also upheld against 10 others. The case dates back to July of 2013 in the aftermath of the military-led removal of Islamist President Mohamed Morsi. A new report finds that if current trends continue, the global gender pay gap won't be closed for another 170 years. The annual study by the World Economic Forum also finds the pay gap has reverted to where it was in 2008 after peaking in 2013. The U.S. ranks 45th on that list. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 6:30 p.m. Wednesday here in New York, 9:30 Thursday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Let's start, as always, over in New Zealand, where the NZX has been trading for 90 minutes now and already looking pretty good, up 1/3%. Nikkei futures are looking mixed, and we are expecting very modest gains here on the ASX at the open. And at the open, we will be closely watching shares in National Australia Bank. Just announced full-year cash profit up 4% to $6.48 billion. That beat estimates. Still coming under pressure from bad debts, though. Bad debts up 7% and net interest margins contracting by 2 basis points. A 99-cent dividend coming out of National Australia Bank. Sticking with bank earnings, the market's going to have its first chance to react to Bank of China, which came out with third quarter earnings after the close on Wednesday. 2.5% rise there to $6.2 billion for the 3 months to the end of September. Later today, more earnings from China Construction Bank, Agriculture Bank of China, and the big one, Samsung, third quarter. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. IBM is teaming up with Slack, GM, and Teva Pharmaceuticals as the company expands its reach of its Watson artificial intelligence technology. IBM has placed a huge bet on Watson being a big part of the company's future. The announcement's all coming out of the IBM World of Watson conference in Las Vegas, where IBM CEO Ginni Rometty joins us now with more. Ginni, thank you so much for joining us. It's great to have you.
Yep, thank you, Emily. Nice to be here.
So you're announcing several new partnerships today, Slack, GM, Teva Pharmaceuticals. Just how many more people will Watson touch as a result of these partnerships?
Yeah, we just had a great conference here. In fact, over 20,000 people, World of Watson. And as I just told the crowd, I said, right now, Watson already touches hundreds of millions of consumers. And by the end of next year, we're on a path to be 1 billion. It will be 1 billion. And that is through, you just mentioned, Emily, some of the customers that we're partnering with. So you mentioned General Motors now coming out in the 2017 vehicles, OnStar Go, which is a partnership with Watson about really using your time in your vehicle in a very personalized but safe way. Or Teva, which is all about changing. Teva, by the way, for those who don't know, it's the world's largest generic manufacturer. And what we're doing all around making the whole process and kind of delivery of drugs in a different way with Watson. And you talked about Slack. And we had just announced, by the way, last week, the work now out and available with Quest Diagnostics, which really does make precision medicine available to almost everyone in the United States.
Let's start with the GM partnership, bringing Watson to the road. Give us an example of how Watson will be powering a new driver experience.
So this idea, and again, keep it simple, but it's interacting. GM has got in about 1.5 billion pieces of information from connection, and you individually permissioning what happens here. So the car gets to know you, and everything from you have a prescription to pick up for your children on the way home, telling you where to get off early, when to go get it, to pre-ordering, paying for your coffee, to another example would just be, look, you're going to run out of gas, getting you to the right place, paying ahead at the pump for you to get your gas. And it just goes on and on from there. So this is just the beginning of it. And in fact, there are a number of partners as part of this first round coming. ExxonMobil, you've got MasterCard, Parkopedia, a whole group of partners. You could see more being added on, but in a very permissioned way. So it just changes that experience, because people on average in their lifetime spend 38,000, 37,000 hours in their car.
Tech companies from Apple to Google to Uber are vying for control of the car. What makes you think that Watson and IBM, GM plus IBM, have something special that other technology companies can't replicate?
Well, in this case, using Watson and the artificial intelligence can't replicate it, and therefore GM has got data that can't be replicated either. And by the way, others have different kinds of data of their own that can get used. So I can see us being able to play a role across many different parts in auto, and we do today, by the way. So whether it's Daimler Car2Go or it's work we've done with Honda on batteries, there's many different places that this type of cognitive intelligence will come into play. And it isn't just autonomous driving. We do participate, by the way, on autonomous driving with subsystems in the car. So this is a whole continuum of opportunity that's out there, and there'll be all different forms, whether it's ride sharing, autonomous driving, your owned car, and there'll be a very wide variety of ways you'll participate.
Now, you say that Watson is differentiated because every client basically gets their own individual version of it, and that, as I understand it, IBM won't own or use that data. Why is that important? And what advantage does that give you over other companies like Google, like Microsoft, like Amazon that are pushing hard on AI?
Yes. Yes, now look, as you know, we've been building Watson for quite a period of time, and in fact, a decade before we even did Jeopardy, and now in this 5 years, how far we have come. And we really made some strategic decisions that make Watson the AI platform for business and knowing what matters to business. And in every business, you've accumulated a lot of information. It's yours. So its value is yours, the IP is yours, but so should be the competitive advantage. So we've made a choice of an architecture where we'll bring data, we'll bring Watson and algorithms, and you bring your data, but the insights go to you as the client, and we're able to separate those so they don't train the base platform. And you make choices on that. And to a client, that's extremely important, because there isn't a client in any industry that isn't going to have as the basis of their competitive advantage be this information. Everyone we know. And so this is perhaps, in my mind, not just mine, clients' eyes, one of the most important decisions we made.
Now, Ginni, you've been hard at work transforming IBM, and Watson is a huge part of that. How would you evaluate your progress so far, given that, as we all know, transformations in tech are not easy?
Yes. Well, and you know, we're 105. We are the only one that has made it through multiple transformations and multiple eras of technology. And I'm proud, the work of 400,000 IBMers. And just last week when we did earnings, you saw the strategic imperatives. They're now $32 billion in size, 15% growth, 40% of IBM. And you'll find Watson is a silver thread, not only through those, but you'll see it in many parts of our base business. If you look at our big technology services business, the largest in the world, much of what they're doing is porting clients to the cloud, and Watson's a piece of that.
So IBM at the same time has several legacy businesses in addition to these new businesses that you're pushing into, and investors still seem to be focused on these legacy businesses. How should we think about, the performance of these legacy businesses versus your newer businesses over the short term and the long term?
Yeah, Emily, and you know, one thing is I don't think of them as legacy businesses. We've divested of a set of businesses that we thought were commoditizing and better with others, but the businesses that we have, these are really important core franchises that we run. And if you look at our global technology services business, our systems business, these are really important parts, have been modernized many times. They may not be in growing markets, but modernized for whether it's blockchain, mobility, security, and to have Watson be part of them. So they're really an important piece. If you look at what we do for running the banks of the world, the airlines of the world, the manufacturers of the world, so they work together. And the announcement with GM is a good example of that. We've been doing work out of our Global Business Consulting Services unit for a long time on OnStar. And so that served as a platform and knowledge as we then moved into what we did here with OnStar Go with Watson. And so they are related together, and they're just two different markets, different growth rates. So what we call the strategic imperatives, businesses that we're either building, they're new, and now clearly at scale at $32 billion and 40% of the company. And the other businesses, our core franchises, while may not be growing, are very important businesses. They're profitable businesses. They're solid businesses together.
Now, you've ramped up acquisitions, and a lot of these acquisitions in part to build up data and boost the power of Watson. Is that something and a strategy that we should expect to see continue?
Yes, and you're right. We've done a good number of acquisitions, and in fact, over the last 2 years, 25 acquisitions. And how we look at them is example for Watson Health. That is an industry that would benefit tremendously from data that you had the ability to reuse, anonymize, and reuse. And so you saw us acquire companies like Truven and Phitel, Explorus, and Merge, ways to train Watson. So that is all for Watson Health. On the other hand, you would have just seen what we acquired, a company called Promontory, which is the world's most expert group in compliance and risk and financial services. They'll be training Watson as we launched Watson Financial Services. So where there's information, where there's expertise, because you're really changing industries and you're changing processes, you need those skills, you need that information, as well as just the technology itself. And that's a really important differentiator for what we do.
All right, IBM CEO and Chairman Ginni Rometty, live from the World of Watson conference in Las Vegas. Ginni, thank you so much for joining us. We're also going to be catching up with Slack CEO Stuart Butterfield coming up next after announcing this big partnership with IBM. This is Bloomberg. to the IBM World of Watson conference in Las Vegas, where Slack and IBM are teaming up to bring Watson to Slack's global community of developers and enterprise users. With the computing capabilities of Watson, developers will be able to create more bots and conversational interfaces. Joining us now, Slack CEO Stuart Butterfield. Stuart, every time we talk about bots, I feel like we're adding new words to the dictionary. Some people don't necessarily even understand what this means in practice. But tell us how this partnership with IBM actually changes the user experience for Slack users.
I would love to. So there's a couple of simple ways. One of the ways that we're going to be integrating Watson technologies into Slack in a very direct way is to increase the capabilities of Slackbot, which is a friendly bot that helps onboard new users into Slack and answer questions. That's just kind of scratching the surface. Right now, there's thousands of developers who are creating applications for Slack for customers to use to interact with systems for business workflows, processes that they use. You know, things on the one hand like submitting an expense report or setting up a meeting time. And a lot of those right now are very dumb. They're useful, but they're dumb. And to the extent that we can help developers leverage Watson technology to make those applications smart, to make a meeting scheduler that understands the precedence of people, understands what kind of meetings can be shuffled around, and do a much better job. So kind of approaching human-level intelligence in these very simple applications.
So if you're using IBM AI, then what is Slack building in-house, and how do you decide what to build in-house versus what to bring in from outside?
Well, the surface area for these, I don't know what we'd want to categorize them as, like intelligent technologies, is really, really broad. We have a group in New York called Search, Learning, and Intelligence, and there's still a lot of value, obviously, in simple keyword searching, and so we're working on that and improving the technology there. And we're working on things that are pretty particular to people's use of Slack, so things like recommendations on channels that people should join or channels that people should leave. Where I think there's some intersection and where we can really collaborate with the IBM team is on things like summarization of information you missed while you were out, helping you catch up from a day of travel, or if you imagine a really capable and intelligent chief of staff who is able to read all of your messages for you and kind of distill it down to the few things that really matter today, maybe make some proactive recommendations for things that you should take care of. I'm lucky enough to have someone like that, but even she's not capable of reading every single message, and a Watson-powered bot is theoretically capable of that, and we're making some nice progress now, and we have big expectations for the future.
Now, Slack seems to be a target these days. You've got everyone from Microsoft and Facebook trying to do what you do. Let's start with Microsoft. They're reportedly trying to take you on. They've got some of the tools in place already, like Yammer, like Office, like Skype. Do you have any concerns about that?
We welcome the opportunity to compete. I mean, one of the challenges we have, frankly, is that this is a brand new category and not everyone knows about it. So I think Microsoft kind of giving its seal of approval on this as a category is actually going to help us quite a bit. If you ask our customers, what did you use before Slack? 80% of them say nothing, even though obviously they did use tools for internal communication. And you can imagine what kind of challenge that is when we come into brand new companies where people have no idea what they would even use this for. I believe in our ability to produce a product that people truly love, and people list Slack as a perk in job descriptions. We have this kind of organic growth, which is usually unseen. So here at IBM, we started off with 5,000 people using IBM at the beginning of this year and ended up with 30,000. And that wasn't because we pushed. That's because people love the product and they find genuine utility in it, and it therefore spreads. So I think they're going to have to compete on that basis of building products that people truly love.
And do you have similar feelings about Facebook's new product, Workplace? This is something that they've said they've been testing in-house for 2 years. They're touting AI. And look, Facebook does a lot of other things like Microsoft does as well, but they're still Facebook.
Well, I don't know if you've ever seen this photo of 1977 era Microsoft when they're all hippies and they look all crazy, and no one thought that they could take an IBM in the operating system business, but they were very successful there, and IBM is still a very successful company. And then Microsoft went up against Google on Bing, and they put a lot of money and a lot of effort into competing on search. Microsoft's still a very successful company, but wasn't able to catch Google on search. And then you have Google pouring everything they got into trying to take down Facebook on the social side. Again, Google toggles as either first or second most valuable company in the world, but they weren't able to catch Facebook on social. And now you have Facebook going up against Snapchat. So the moral of that story, as far as we're concerned, is if you're a large incumbent, and you have many lines of business, and you're going up against a small, capable startup that has a lot of traction, it's very difficult for you to compete.
Moral of the story also, I hope you're taking lots of pictures for posterity. Last question, Stuart. Slack is clearly gaining traction, but oftentimes that traction is among individual teams within larger companies, and different teams at different companies use different things. How do you overcome that challenge? Because if not everybody at the company is using it, then certainly you're not seeing the full power of the advantage of using your product.
Yeah, so I think as we move to the enterprise product, which will be coming out next year, but which we have a couple of larger customers, including IBM, beginning to test, we're starting to see the benefits that come from the whole company using it. But it has always been a product for teams, and that is still the core of it. And a team can be 5 people, it can be 15 people, it can be 50 people. You know, when you get to 50,000 people, it's only a loose metaphorical sense in which they're a team. So what we want is something actually a little bit different, which is the ability to have multiple overlapping teams. People can have memberships in multiple, there can be shared channels, and you can create any kind of organizational structure you want. But there's still a huge amount of value, even inside a large organization, for a team of people, which can be like, you know, a business unit, it can be a functional area, it can be an office location, to be using Slack just within their team.
Okay. All right, Slack CEO Stuart Butterfield, fresh off a new partnership with IBM, joining us from Las Vegas. Thank you, Stuart. We will be right back. This is Bloomberg. Microsoft kicked off its Surface 2016 event, the tech giant announcing a new all-in-one PC called the Surface Studio that may be aiming to take on Apple's iMac. Microsoft also announcing a new Surface Book computer and an update to Windows 10 that focuses on creative features. Joining me now to break it all down, IDC Chief Research Officer Crawford Del Pret. So what would you say the highlights were today?
Well, clearly the belle of the ball was the Surface Studio. They're going after the iMac 5K. It is a pricey device. It's a device that's going to be priced somewhere between $2,900 and just over $4,000, depending upon the features. But the couple things Microsoft are doing is they're leveraging touch, which is something Apple is not willing to do and doesn't do in their OS or in any of their desktop devices. Having said that, what Microsoft is also doing is, they're leveraging premium hardware, and they're starting to integrate features only available on Surface, which is a trick that we've seen out of Apple. It's a trick that we've seen out of Google. We saw it on the phone with Google Assist. Now they brought up a product called Surface Dial, which is a way for creators to navigate very quickly that only works on Surface devices. So you're starting to see Microsoft sort of leverage the power of the Surface to give you that integrated experience.
Now, talk to us about how what they're doing fits into the broader context of what's happening in the PC market, because we've talked about potentially hitting a bottom, and then it seems we're not hitting the bottom.
Yeah,
exactly.
Right. Yeah. So I think the PC market is at a kind of important inflection point. We're starting to see that demand, particularly in commercials, starting to recover a bit. And I think that what Microsoft is doing is they're going to leverage their ecosystem. So I think that the Windows Insider program, them bringing 3D Paint, which is a way to experience and scan 3D devices to Windows, will allow a broad range of users, the whole Microsoft ecosystem, to start experiencing 3D. What they're also starting to do now is they're going to integrate that 3D capability into Office. So we believe that by 2021, augmented reality will be used in 35% of connected meetings in an enterprise environment to sort of help people collaborate in new ways, starting to disrupt the web conferencing market, the $3 billion web conferencing market. We believe this is the beginning of that trend. Microsoft is taking the power of Office and they're integrating 3D. The next phase will be integrating augmented reality, which they also announced today. They announced low-cost augmented reality devices available from PC leaders like Hewlett-Packard, Dell, ASUS, and Lenovo. So, again, you're starting to see that, we'll see that hardware next year and new kinds of experiences around augmented reality.
And just quickly, we only have 30 seconds.
Sure.
Apple's expected to unveil a new lineup of laptops and Macs tomorrow.
Yeah.
Do we think any of these things are actually going to change the direction of the PC market?
I think that, yes. The short answer is, I think that the PC is relevant. It's not going away. It is the #1 creation tool. And it's about refreshing and updating the platform, and that's really what we're seeing.
Okay. Crawford Del-Pratt of IDC, Chief Research Officer. Great to have you here in San Francisco today.
Great to see you.
Thank you so much for stopping by. That does it for this edition of Bloomberg Technology. Tomorrow, a big day for tech earnings. We will break down Twitter, Alphabet, and Amazon right here. And remember, all episodes of Bloomberg Tech are now live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays, 6 p.m. in New York, 3 p.m. in San Francisco. That is all for now from San Francisco. This is Bloomberg.
join me in welcoming James Clapper. I want to begin with Russia and the U.S. relationship with Russia. The Russian UN ambassador said in the last week that relations are as bad as he's seen them in the last 40 years. Characterize the U.S.-Russian relationship.
Well, it's not certainly not at its peak by any stretch. We've had a lot of difficult issues, notably in Syria, Ukraine, just to name two. So it's a stressed time for the relationship. I don't know that it's worse than at times I can recall.